Hey, what's up, you guys? It's Marco. So it looks like we're back at it again. Americans are spending more money than ever before. According to a new report by the New York Fed, US household debt increased by $313 billion during the second quarter of 2021. That is the largest increase in 7.5 years. Obviously, with so many people with pent-up savings from the pandemic, getting unemployment checks, stimulus checks, and just pretty much keeping more money in their pockets because, during the pandemic, restaurants were closed, bars were closed, and there wasn't just many chances to spend money. Now we have a lot of money in the bank account, and I guess we're really ready to start spending it one more time. But hey, today I'm not gonna be chastising people on why they're spending money or why they're spending even more money than I did before, but actually, guys, this video is to help you come up with some easy ideas on saving money, and I'm gonna be giving you some really easy tips that honestly anybody just can take advantage of right now in 2021, so that you don't fall into the same trap of just getting more credit card debt, more personal loan debt, and things that may make your financials not so good, And even easier than saving money and actually pressing the buy now button on Amazon is, if you like the video, make sure that you press that like button just right below. It honestly takes you less than 0.1 of a second and doesn't cost you absolutely nothing. And it's gonna help me grow the channel a little bit more and spread the message to a lot more people. So if you haven't done so, please help me out, guys. Thank you so much. All right, so the first step to saving money is knowing exactly where your money is going. Because guys, if you don't have a system to track where your money is going, then there's actually no way of you tracing where the drain is. So knowing where your money is going at all times definitely helps. Well, obviously just plug in the holes, you know what I mean? And one of the things that I actually do personally is that I go over my last 6 months of bank statements and credit card statements. And my job is really just to tally up what are some of the expenses that I'm having. Also, I want to make sure that I see what are some of the things that I could have done without, where I could have saved money, what are some of the items that I honestly could have just not even purchased and I would still be fine, which honestly is probably about 80% of them, just like everybody, right? And also, by analyzing your transaction history, you're gonna be able to see if maybe you can save some money on some subscriptions. It seems like nowadays everything is based on a subscription, whether it's a gym subscription or a food subscription or a streaming subscription, whatever the case might be. It seems like everything is either $9.99 a month or $12.99 a month or $29.99 a month, depending on what it is. And I know so many people who try saving money on not having a cable bill, so they cut the cord on cable, but instead they just started signing up for every single streaming service out there. So knowing exactly where your money is going and tracing where your expenses are is literally the very first step, because now we can just pinpoint different things that we can improve on. Now, a lot of people use spreadsheets in order to track their expenses. To me, that's a very low cost way. Obviously, you can do a Google spreadsheet and it's not gonna cost you anything. Unfortunately, at least to me, it's a lot of work personally. I'm not very disciplined, and I feel like a lot of people are just not disciplined enough to always put their expenses in their transactions on a spreadsheet, especially if you have multiple accounts like I do personally, different credit cards and things like that. So if that's a little bit too much for you and completely understand, I do suggest you to download certain finance apps, and my favorite one is Mint. Mint is available on both iPhone and Android, and you can get it, for free, and you can, just sync your accounts. You can sync your bank account, checking, savings, and you can sync any other credit cards. In the app itself just keeps track of pretty much everything. There are other apps out there that do a pretty good job as well. I know I used to use Hiatus. Now that one is paid. I believe it's about $5 a month. It's worth it, but honestly, Mint for me is probably the best one, and it's free. I'm gonna be linking it down below so that you can, check it out if you want to. Now, once you track everything on your bank statements and your credit card statements, then honestly, the first step is to just start working on the things that you're spending the most money on. Personally, my biggest expense that I literally could do without is restaurant expense, and that's gonna be my second point on saving money. You guys don't really realize how much money goes into eating out or drinking out. If you spend any amount of time in a city and you have to eat out all the time, literally that can add up very, very quickly. And in fact, about most of the country on average, the average bill for householding eating out expenses is about $3,000 a year, which comes out to about $250 a month. $250 a month is really not much, especially if you live in a big city like I do personally, and obviously depending on your lifestyle. 250 bucks is really, I mean, that could be just 1 or 2 different days on either having lunch or having dinner or just eating out with friends. I personally spend a lot of money on all those items because of my lifestyle, and obviously I meet a lot of clients at the same time. I meet a lot of friends, my girlfriend and family. We always like to have a good time, and that obviously adds up. So that's one of the things that I always pinpoint on my statements, that sometimes I just need to sort of scale down a little bit. If you're having issues with eating out as well, like I do, and you know, it's sort of becoming a thing, then you need to start looking at meal prepping. And meal prepping obviously does take some time because you're gonna have to sit down and, well, not necessarily sit down, but you know, you have to get in the kitchen. It's a great thing to meal prep because not only you're gonna be saving a lot of money every single week by planning your meals ahead, but also it's gonna help you save a lot of time. You know, every single time that you guys go out and get lunch or get dinner, it's typically gonna be 30 to 60 minutes, you know, if not more time. But if you already have your meal preps in order and all you have to do is just stick it in the microwave, then it's gonna help you save a lot of time. The meal prepping is actually the cheapest way of eating. Typically a meal prep can cost you anywhere between $3 to $5, and the best thing is that you don't have to tip anybody. You know, so the savings are a lot. For number 3, I have shopping around your insurance. And this goes for both homeowners insurance if you own a home and car insurance. Obviously, most people have a car. And you know, a lot of times I found that people just don't shop around their insurance just because, you know, it's pretty comfortable to have the same insurance company, and especially if you bundle everything, which typically when you bundle your insurance, both car and home, you typically get a pretty good rate. But a lot of times, if you don't really kind of keep, you know, stay on top of it, then you might just end up overpaying because you don't, you're gonna have coverage that you're not necessarily gonna need, or you might just be paying for too much coverage that you don't need, which obviously is going to increase your premium. So shopping around your insurance is a smart way of doing things with your insurance. I typically shop around my personal insurance once a year. You don't have to do this all the time, once or twice a year. That's good enough, and it's really simple. You can just go on Google and just Google for insurance companies, or you can talk to an insurance broker, and that insurance broker will shop around different insurance companies for you. There are different applications out there or websites where they also show you different rates and different options as well for you to take a look at. And if you're a homeowner, switching your homeowner's insurance from one company to another one can be very easy. In fact, you don't have to deal with the mortgage company whatsoever because the insurance company deals with it right away, and it's a very seamless transition. I personally did this with one of my properties a few months ago, actually about 2-3 months ago, where I was paying $1,100 on my condo insurance, which is a lot of money for condo insurance, and I was aware of it, but I was refinancing as well. So my whole thing was just to finish up the refinance and change the insurance. So I ended up talking to an Allstate representative, and she was able to offer me a $400 a year insurance for my condominium, which basically helped me save $700 a year. And I see this all the time with people just sort of, you know, again, just being complacent about having the same insurance company. So maybe switching your insurance company can save you anywhere between $200 to $300 a year, if not more. Now, one thing that I'm going to add up on this is if you just recently converted a primary home into an investment property, you definitely want to change your insurance because you no longer have to have insurance as a homeowner's insurance that, you know, for your primary dwelling, which obviously costs more money. Now you can have a landlord insurance, and it's gonna be a lot cheaper. So if you guys just recently did, you know, something like this, you went through that transition, make sure that you definitely do that. All right, number 4, if you're a homeowner, so we're gonna be staying in the house, then you have to apply for your homestead exemption. And this is one when I see a lot of people just not do whatsoever. So if you don't know what a homestead exemption is, the very first thing, and I think that's like the the biggest thing what homestead exemption is that it basically protects your home against creditors. So if you go into bankruptcy or you fail to pay somebody, then they cannot go after your property in order to pay your liens and things of that nature. So the homestead exemption protects you as far as that goes. Now, it does have to be your primary home. It can be an investment residence or a second home, and you can only have one homestead exemption. That's the only one that you can have. But in addition to protecting you against creditors, the homestead exemption can also help you lower the assessed value on your home for tax purposes. So for instance, if the county assesses your home at $200,000 and you have a homestead exemption for $50,000, then you are gonna be taxed on $150,000 on your assessed value. Obviously, getting taxed on $150,000 versus $200,000 is gonna help you save money on your county taxes. And if you are paying a mortgage with escrows, then that's also gonna help you decrease your monthly payment because your property tax bill is going to decrease. Every state and every county is different, so make sure that you do this in your own specific location. And homestead exemptions are pretty much available everywhere except New Jersey and Pennsylvania. I think those are the only two states that do not have a homestead exemption, but everywhere else it does. So make sure that you check that out. All you have to do is literally put homestead exemption on Google in your state, in your city, in your county, and our results should come up. And you only have to do this once a year, so it's definitely worth it. It only takes a few minutes to do. All right, number 5, we are going to talk about debt, and the biggest debt that most people have is gonna be their mortgage. So we have to talk about refinance. And if you're a homeowner, obviously, and you haven't refinanced in about a year or even 2 years, then this is something that you definitely wanna look into because mortgage interest rates have decreased to the lowest levels in pretty much history. Now, obviously, they were probably a lot lower back in 2020. Believe like around October time is when they decreased to the lowest levels in history. But still in 2021, mortgage rates are still very, very good. When you refinance your home, you're able to either drop the monthly payments a little bit. You may be able to get rid of mortgage insurance if you're paying PMI, which is obviously going to help you save money on a monthly basis. Obviously, with interest rates decreasing, that's going to help you save money on your monthly payments also, in your principal and interest. So if you haven't refinanced and you haven't looked into it, then that's something that you definitely want to check out. So for instance, if you owe $400,000 on your mortgage and you have an interest rate of 4%, then you're paying on your principal and interest about $1,910 a month. But if you were to refinance that same mortgage at 3%, then your monthly payment will come down to about $1,686 a month, which is a difference of $222 a month, or the equivalent of roughly about $2,400 to $2,500 a year. Now, if you're not a homeowner, but you are a car owner and you have a loan against your car, then refinancing could be also an option for you. Now, car loans typically have higher interest rates, especially if your FICO is not very good. Typically also, a lot of people just get car loans. They don't ever shop around their car loan, and they go straight to the dealership, and the dealership gives them a really bad interest rate. I've seen people with 10% APRs on their car loan. So if you had jacked up credit in the past and you're paying on a car loan and your payment is too much, and now you have worked on getting your FICO better and you are in a much better position, then refinancing your car loan is a really good idea also, because it's also going to help you get that interest rate very low, and it's going to help you save some money. Now, there are typically no options to refinance credit cards, but there are options where you can restructure your debt, and that's going to be my next point. So if you owe credit card debt, then there might be some different options for you. For instance, you can move your high interest debt from a credit card into a 0% APR credit card, where obviously your monthly payment is going to come down and you're going to be saving a lot of money on interest. Interest rates on credit cards are very high. On average, they can be anywhere between 18 to 19% APR. But if you move your money into a 0% credit card at a period of, say, roughly 12 to 24 months, then you're gonna be able to save on both. Now, be careful when you're moving money from one credit card to another, because if you don't pay off the credit card in full, at least the new one, then you're pretty much gonna be, pretty much at square one, when you're really not going to save any money. All you did was just transfer one debt to another. So make sure that if you do a balance transfer from a high interest rate credit card into another, that you're going to be paying off the new balance very quickly. You can also consolidate your debt in different ways. So if you have credit card debt, then you might be able to consolidate it into a personal loan, which obviously have lower interest rates, and sometimes you can amortize the payment for a longer time. There are a lot of websites out there that offer personal loans, and it's really simple to get them. You can check out Lending Club, you can check out SoFi, Upstart are some of the ones that I definitely know about. Your bank might have a personal loan option as well, so make sure that you check those out. Shop around the interest rate, shop around the amount of time that you're paying, any fees and things of that nature. I'm gonna be linking the ones that I know in the description box below so that you can check them out. There are no affiliate links or anything like that. It's just basically for you to check out, and you do yourself that favor. Now, another thing that you can do, and this sort of goes back into the mortgages, is if you have unsecured credit card debt and personal loans and student loans and pretty much anything that have a high balance, high payment, high APRs, then you may want to consider doing a cash out refinance on your home or getting a HELOC on your home in order to access equity from your property. So when you take out mortgages and you take out HELOCs, typically those are going to have the lowest interest rates, where obviously it makes sense to consolidate high rate debt into the lower interest rate. And when you consolidate any high interest rate debt or unsecured debt into a mortgage, it's not only going to help you save money on interest, but also it's going to help you decrease your monthly payment drastic. If you owe $30,000 on a credit card at an 18% APR, you're typically going to have a payment of about $700 to $750 a month. Whereas if you took that money and you consolidated it into your mortgage payment might just go up by $130 to $150 a month, which obviously will help you save roughly about $500 every single month just by consolidating. So if you don't know much about kind of how cash out refinances and HELOCs work, I have a lot of videos in my channel where you guys can check them out and just see for yourself and see if those are options for you. Link in the description if you want to set up a time and talk to me about some of those things. You can also put them in the comment box below, and I'll be more than happy to give you guys any feedback that I can. All right, I think we're at number 7, and we are gonna be staying in the house. And this one, I know you probably thought about it. A lot of people do, and a lot of people still don't take advantage of it. But not only is this gonna help you save money, but also it's going to help you lower your expenses and put some money in your pocket. And this is renting a room or part of your house either to a tenant or do it on Airbnb. And basically this is what we call house hacking. And if you are a single person and you have no family, then this is actually even better because you don't have anybody else to worry about. But just think about this, and obviously depends on whatever it is that you live in, whatever part of the country is. You might be able to make a pretty good amount of money by just renting out a room or a basement on Airbnb. So for instance, I live in Atlanta, Georgia, and a lot of people that have basements that are close to Mercedes-Benz stadiums where the Atlanta Falcons play, kind of around the downtown area, where we get a lot of traffic, or maybe even close to the airport. People can rent out their basement on Airbnb and actually be able to pocket somewhere around $700 to $1,000 a month, which that will cover a lot of money on their mortgage payments. I know even some people that just by renting out a room on Airbnb, they can cover up to 75%, if not more, on their house payment completely. So they're pretty much living for free. Obviously, depending on what kind of part of the country you are, maybe Airbnb and it's not a really good idea, but maybe you do know somebody that needs a room and you can rent out one of your rooms for $600 to $700 a month. And believe me, that will help you not just with your house's payment, but also with your utilities, your gas bill, whatever the case might be, and just put some additional money in your pocket that you didn't have. That's one that was just very simple. If you don't own a home and you still rent, maybe if you're renting a home, then you might just be able to do the same. You just sublease part of the home to a person, or just do it on Airbnb as well. You can definitely do those things, obviously with the permission of your landlord. Now, my last 2 ways of saving money are gonna be a little bit more difficult, and I know it's gonna take a lot because you're gonna have to change your habits, your living habits, etc., etc. But honestly, guys, downsizing or just stepping down a little bit is honestly one of the most non-brainer things to do when you're trying to save money for whatever financial goal you want to accomplish. So if you're living in too big of a house that you have absolutely no need for, and a lot of your income is just going out towards the expenses of the property, where basically now you're just living, just to pay your house bill, then downsizing into a cheaper house is not a bad thing. And in this market right now, where just property values have gone up so much, and especially if you're a homeowner, then selling your home will probably make a lot of sense, because you're going to be selling at the highest levels that any home seller will sell. The equity position that a lot of home owners have is tremendous, and not only you will be able to sell your home, get a lot of money from it, but you may be able to use the money for things such as consolidating debt, just paying off debt basically, and putting some more additional money in your pocket, invest, etc., etc. The same thing goes if you are paying too much money on your car, and you can literally go from driving a Land Rover to a Toyota and cut your monthly payment by $300, $400, $500 a month, then definitely do it. Look guys, if you are making just $80,000 a year, but you have an $800 and $1,000 monthly payment on your car, then believe me, you're overreaching, you're overextending yourself. Makes absolutely no sense whatsoever, just to drive one thing that's gonna take you from point A to point B. Downsize a little bit. I know it takes time, takes courage, and definitely is going to punch your ego in a way, but doing so is gonna help you. All right, so here are gonna be my other bonus ways of saving money, and these are just little things that I sort of accumulated throughout the years. The first one is gonna be cutting on bank expenses, bank fees. So guys, I hate fees. Honestly, fees are dumb, fees are stupid, and I cringe when I see some of my clients that are getting charged on bank fees because of like maintenance fees. So if you bank at a Wells Fargo or Bank of America or one of those banks, and they're charging you $25, $30 a month just to have a savings and a checking account, then you have to fire that bank right away. Okay, there are a lot of banks online. You can go to Schwab, you can go to Chime. Those are very popular online banks that they don't have any branches, but they don't charge you any fees for having a checking or savings account. And in fact, they might even help you just sort of like track your expenses, and also their yields on their savings account is pretty decent. Maybe about like 1% a year, which is better than whatever Wells Fargo pays, which is like 0.001, all right? So if you're paying bank fees, be done with it. You guys need to go ahead and move your bank account into a Chime, into whatever bank that does not charge any fees. Saving $25 a month is the equivalent of $300 a year. And unless you don't care about $300 a year, then you can always Venmo me. I'll put my Venmo in the description box below. Another last one is gonna be using money saving apps. So if you do grocery shopping, we talked about meal prepping. This will probably help you guys, but I use certain saving apps, I guess, like couponing, what used to be called extreme couponing back in the day. You can do it nowadays on apps, and there are a lot of ways where you can save just a little bit of money, even $3, $5, $6 every single time I go to a grocery store. That definitely helps. But I use an app called Ibotta all the time, and basically what I do is that I just sort of choose some of the things that I actually need, and then all I do is I take a picture of the receipt, and it gives me some cash back through PayPal or whatever the case might be. Kind of, they give me a gift card on PayPal, and obviously I get to save maybe even 5% on my grocery bill. Sometimes it doesn't work, sometimes it does work a lot. Now the other app that I use is called Rakuten, and Rakuten is sort of like, I guess they get affiliates from like different merchants, and there are a lot of them. I mean, you can get a lot of cash back from shopping at Best Buy or Nike or even Amazon sometimes. So it's gonna change every single day. Sometimes there could be a cashback feature on like Amazon, sometimes there might not. But this doesn't mean that you have to go out and start buying a bunch of crap just in order to go ahead and save 6%. But if you are in the need of buying something, and that something is bought online, then just be sure to check out Rakuten before you actually start shopping. All you gotta do is just sign up for an account, link in the description box below, and then it's going to route you into whatever website it is that you need to go, and it's going to apply your cash back once you check out. So it's really simple. Honestly, it's basically just one more step before shopping for anything online. All right, thank you so much for watching, guys. That's basically all I have for now. If you like these tips, you want me to add up anything else, if I forgot anything, there are over 100, 200 other tips out there. These are the ones that I use on a daily basis, or at least in my personal life, and these are some of the tips that I tell my clients to use. But if you guys liked it, make sure that you drop a like, subscribe to the channel if you will, and if you have any questions, anything that I can add into other videos, then just go ahead and put it in the comment box below. Once again, guys, thank you so much, and I will see you in the next one.